As promised, we'll be talking about the big flows that have come in into mutual funds and also multi-asset funds. Kaplesh Ashar joins us now on the show. Hi, Kaplesh. Good evening. Thank you for joining us today on the Money Show. Apologies for the delay. Let's start off first by, what we saw in the month of July. More and more people chose to redeem their funds, and that's the reason why there was more money being taken out of mutual funds in July than being invested in. Just to put it simply, more redemptions versus SIPs or, new investments in mutual funds. What do you think the reason for that is? I mean, we always say, right, that mutual funds is meant for long-term investing, but this is what we saw in July. We saw this bout of selling coming in or redemption coming in. Is this because the markets were so high and people decided that, might as well take some money off the table? And is that the right mentality to go by when investing in MFs?
So, Mubina, there are various factors, I think, which are playing simultaneously on in the markets right now. So, starting with the onset of the pandemic in the end of March, when we saw markets going to an all-time low and there was a complete panic and everything was in a big question mark. Right from that period and from April onwards till where we are today in the first week or second week of August, we've seen the markets against all contrary expectations rise by almost 50 to 60%. And whereas it just defies logic and defies gravity as to why the markets have gone so high in spite of all the fundamentals and everything being against them. Now the investors have been seeing this. They have been also watching how the direct equities in this rise have literally outpaced the mutual fund returns, because the rise has been so rapid and in a very vertical way that it's obvious that if you're buying a stock and if you hit the right button, the stock is going to give you very good returns. Apart from that, we also saw a big influx of the young investors getting into the markets through the online platforms, and the digital mode took over. So they didn't have to depend on the conventional ways of investing. They were at home. There was a little bit of more available time to them. They saw that there's a rise happening. So that is one of the reasons that they saw the comparison between equity and mutual funds, that it's outperformed. And I think that is a little bit of, I would say, semi-culmination is happening in July. But that does not take away the fact that mutual funds, like what you rightly said, is a long-term investment. And although there has been a dip in the SIP flow or something, I don't think it's the end of the world. Secondly, the major factor what has been going on is people have seen I would say the titanic rise of gold as an investment, and that has been just unprecedented. So many people also have tried to shift the asset class and shift their goalpost from equities to gold investing out there. So gold ETFs and gold mutual funds and now the sovereign gold bond scheme, all that has taken a little bit of a priority over the mutual fund sector. So this has, I think, been more or less the couple of factors which have tilted the balance out of favor of mutual funds, and that's what the figures we are seeing. But I don't think it's a matter to be disheartened, because surely, and we'll have to be patient with how things pan out, because the people who've jumped into the equities to make a fast buck, they should understand that these things can turn around very quickly, and at some point of time they will have to come back to the tried, tested and patient method of mutual funds.
Well, understandable. We've seen a rapid rally in gold, so that could be, a reason why. I want to shift our focus then to multi-asset funds. As the name suggests, they invest in more than one asset class, as opposed to, an equity mutual fund or a debt mutual fund, which will invest only in equities or only in debt, respectively. Kaplesh, I want to understand your opinion on these multi-asset funds. Are they a good investment? What sort of a portion should they form of an individual's portfolio, if any? And this question is again pretty relevant given the fact that we are seeing, like you mentioned, this rapid rally in gold prices.
Absolutely. And what's happening, it's two-way. It's the multi-asset fund find a flavor or a favor, I would say, with the investors, because they, in these times of, I would say, a lot of question marks being raised. They don't know, they can't make a choice on their own without an advisor's help, whether to go the equity way, whether they should place their money in a conventional bank FD, or they should look at gold, which is just spiraling high, equity spiraling high. So what do? They look for products, they seek products which have a mixture of all, an assortment of all. So that's what the investors would be looking for. Now, what do the product manufacturers or the mutual fund houses or the AMCs do? They also try to capitalize on this type of a psychology, a requirement, that what is it that we can offer to the investors, considering their dilemma or their need, and also in a way look at enhancing their AUMs also. So they are coming up with this multi-asset type of a product. By features, it says that it has to invest in more than two asset classes. So in a hybrid fund, in mutual funds, you have equity and debt component. Here, compulsorily, they have to invest in three or more asset classes. So ideally, you have a mix of a multi-asset in equity, in fixed income, in commodities, and in gold. So you have a big segments where you have a choice. Now, what happens ideally in this is that the fund manager or the AMC, as per their call, decide to allocate a percentage of each of the asset class as per their own research or their thought process or their findings. And the investor has to stick to that. Now, I would not say that this is a bad thing, because for some it is a ready-made asset allocation. But from a perspective of a financial planner, I would always look at it. We say that it's personal financial planning, and everybody's financial plan or profile is personal. So when an asset allocation exercise needs to be done, it needs to be done in a very, I would say, concentrated way, deciding which asset is good for a particular investor's profile, and just not give him a mixed bag. And if many people, like what I said, the flavor of the season now, if people are looking at that, oh, gold has also run up, but I want a small bet on it, should I invest in a multi-asset fund? And similar thought, pervades in the mind of a AMC that, okay, we can give a little bit of gold. I don't think it serves the purpose either ways. So people looking at multi-asset funds should not look at them as they are, one-stop shop for asset allocation and forget everything. I think it's a do it yourself, or with the help of an advisor. You should decide your asset allocation and diversification. And also, it can form a small part of a portfolio. There's no harm in keeping one multi-asset fund in your scheme of things, but it cannot be an asset allocation vehicle on its own. And as far as what people say that even the AMCs would be structuring it, let's capitalize on gold right now, which is doing good, and we'll get a decent amount of corpus in it. I think that's not the right line of activity also. And one needs to understand that many of these multi-asset funds on the taxation part carry a debt-based taxation, so that the taxation which goes with the fixed income part is applicable in many of these multi-asset funds. So there are many pros and cons, but I think people should think about it, that it's not a one-stop shop, and they cannot just invest in a multi-asset fund and relax. I think it's a much more dynamic and focused exercise which needs to be done on the part of the investor also.
Okay, so it's not a one-stop shop. Just because you've invested in a multi-asset fund, that does not mean that all your requirements with respect to having exposure in equity, debt, gold is sorted. My other question is also, I know what your answer is going to be for this one, Kalpesh, since you've already said that this is not a one-stop shop. But if I, for my portfolios, I believe that I don't have any gold, but I do have a multi-asset fund, is that as well good enough? I mean, we often say you should look at gold also from the point of view that it's a good portfolio diversifier. Would this multi-asset fund act as that? Because, for the many multi-asset funds that we have seen, they have a very small portion of their fund in gold.
You actually answered the question itself, that they have a very small portion in gold. So if you are chasing gold, and let's be precise about this question that you're asking, if it's gold that you are seeking as an investment option, should you be investing in multi-asset fund? The answer is a clear no, because any of the multi-asset funds would not take a 50 to 60% exposure to gold as a singular asset class. The bend would always be towards equity or debt, keeping that as a platform. And the other three asset classes would accordingly form a base. So if it's gold which you are looking in as a part even of your portfolio, we say 5, 10, 15% of your portfolio is what gold should be, then it should be either in the form of the sovereign gold bond or the ETF or the gold-based mutual funds. That would compose your 10 to 15% of gold. One more thing, many of these gold-based funds right now, Mobina, I would like to draw the attention, have removed the exit load. I'm talking about the mutual funds. So what could happen is that even if you are a very gold fan, a fan of gold per se, and some people would want to have that small portion as a contingency also in their portfolio, plus a hedge, which we always say against inflation. It would serve that purpose also, because you can even remove that amount at whatever is the prevailing market value in case you require that money as a contingency, a small part. Surely it can't be a whole contingency fund. So singularly, gold has to be looked at as an asset class. It cannot be a part of a multi-asset to fill up your allocation.
At etnow.tv if you have any queries. Let's take on board our very first query. P. Vijaya Lakshmi, who has written into us saying that I've invested 6 lakh rupees in the HDFC Balanced Fund in 2018 for 5 years. Now it is minus 10%. She wants to know what should she do, especially because she needs the money in 2023 for her daughter's marriage. Should she wait for another year? Kalpesh?
I'm not a great fan of hybrid funds per se, but especially this particular fund mentioned here has been a part of the dynamic asset allocation category in the hybrid ones, and it has been deviant to that. But it has got a great pedigree to it, and people had invested it. And unfortunately, this lady has gotten into it in 2018, and then there has been the fall, and it's still 10% in negative. So considering the time frame of a goal that she's got a marriage of her daughter coming up in the next 3 years, what I would say is that because you stayed put for 2 years, you could still stay put for another couple of years in this fund. But prior to doing that, you can redeem 50% of this 6 lakh rupees, whatever you have, and invest it for safety purpose, at least some element of safety in a short-term AAA rated corporate bond fund or a banking PSU debt fund, and have some type of stability to this. And then after 2 years, you can again review the balance 50% of this HDFC balance fund and see where it stands, and then take a final call and even shift that to more safer avenues.
All right. So, yeah, that's, of course, Kalpesh's view when it comes to the Balanced Advantage Fund, Balanced Fund. In fact, interestingly, we have seen quite a few redemptions come by in this very category, in July. So, yes, of course, that's Kalpesh's view on what P. Vijay Lakshmi should do. All right, let's take on board our next question. It's coming in from Basab Datta. He says, I have an investment in ICICI Prudential Equity and Debt Fund. He is expected to receive monthly dividend. He's opted for the dividend option. And he says that the last dividend received was in March 2020. And he noticed that even though the market is improving, there is no appreciation in this fund. So he wants to know what should he do. And Kalpesh, many people have been asking us this question, that even though the market has done well, my mutual fund is not doing that well. So what exactly should such individuals do with their mutual funds?
So first of all, just clear the myth that if you are investing in mutual funds for availing of dividends on a regular basis, you're not going to have that. And unfortunately, this gentleman has understood it the hard way, that the mutual fund dividend payouts are at the discretion of the AMC. And when the market takes a hit, they have all the right to, stop paying the dividends even after that, as per their regulations and as per the valuations. So dividend payouts should not be considered as the criterion for investing in mutual funds and getting a regular one. First of all, if you want some type of a regular income generated from this, you could easily switch to the systematic withdrawal plan, which is the SWP, and fix up a date and fix up an amount which you want regularly to be generated and your bank account to be credited. So you could look at the SWP option, a much more better way than depending on the dividend payout. As far as the dilemma goes of the markets having risen but my fund not doing well, could be various reasons. Some of the funds have played on the value type of investment where they've depended on certain stocks to go up, under certain circumstances, and that bet has not played out. Whereas the normal growth-oriented high beta stocks have also played out. And as we know in the large cap space, again, contrary to expectations, just taking the whole Nifty along, I think it's just been 2-3. The top leaders have taken it on the way up. So if you are not evaluating your mutual fund scheme on a regular basis, that could be a problem. And other thing is that I'm not talking about this particular scheme. People need to be very careful about the debt component in their hybrid schemes, because which is not regulated as per the SEBI norms. In the debt, there's no limit to what type of credit rating you could have, what type of duration you could have, unlike the pure debt funds, which has now got very strict regulations by SEBI as to what they should be doing. So if the debt component of a hybrid fund is not doing well, even that can take a knock on your valuations not doing well in the hybrid category. And exactly, Mubina, like what you said, there has been a flush of redemptions in the hybrid category, I think mainly due to this reason.
We'll leave it at that. Thank you so much for joining us today, and helping all our viewers out with their questions and queries.